Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, here we have Bitcoin. I'm looking at the Bitstamp chart, currently on the 4-hour, and we are essentially just filling out this ascending triangle. I have a regression trend in place, and essentially what we're doing is we're looking at our third top and our basically, depending how you count this, as 1, 2, and then a third bottom. Essentially just prices slowly moving up while we consolidate inside this channel range. What we're paying attention to though is we put in a top here on the oscillator indicator and one here. We put in a lower top here and a higher one here, and now depending on where this tops out, we would be putting in once again a lower top with the higher top. That would be our third drive of bearish divergence. And you'll notice that on the oscillator indicator we are currently underneath the slope line, with a green histogram approaching the slope line, which is still blue at the moment. But if we get rejected here around this area, or move up to it and then flip this back over red, that is one of the most reliable sell-off signals, or basically a triple bearish divergence confirmation. And then once again, if we just pop up this bad boy right here, I'm looking at the Stoch slope here, and once again we have a high here, and then we have a higher high here, which is not going to be 3 drives of bearish divergence. But if we use this one right here, and then our current one, oh, I'm sorry, that's actually the wrong one. So this was the last one right here. That was the one back here. I just looked at that wrong. So matter of fact, we do actually have 3 drives of bearish divergence depending on where this tops out. So that would be the first one, that would be the second one, and then this would be the third one. Now what I'm paying attention to here is we have been operating inside of, on the 4-hour, this blue and purple trend line. Blue would be the support here at the bottom, purple here at the top. You could go with the red one if you like that one a little bit better, but essentially it's the same thing. And then we were essentially, this one's, don't worry about the yellow one, that's on the daily. But essentially we were coming down and bouncing repeatedly over it. We had 2 small breaks out of the bottom that were fake outs, and then we came back up. And then here you'll notice the green one, we were doing the same thing again. We started operating inside of this area right here, and then we broke out the bottom and got like a fake out before that next massive pump up. So now here we have that fake out, come back up, got back into the channel, found support, broke down from it. And now what I expect to happen here is come up and get rejected, and then that would be 1, 2, 3 drives of bearish divergence. So that is what I'm paying attention to right now. Now what's going to happen if that plays out? We'll just get a pullback. Now does that mean we're just going to start dumping and go back to 4,000? No, not by any means. We could easily pull back to any one of these other supports. You'll notice we have a bunch of different diagonal lines on the chart, essentially, because before the breakout from this area right here, we essentially had formed a triangle, broke out to the upside here, started forming an ascending triangle right here, broke out to the upside here, started forming our channel right here, and now a pullback would take us back to one of our previous levels of support. Now where's that going to be to? I would assume that we come back down to either the orange or red line here in like the 17.8 range. We could come down, and that's going to line up with the 50-55 moving averages. We could come down here to the 89, which is going to put us closer to like the 7.4 range. We could come down here even lower, but I would expect essentially the 200s are going to line up with our horizontal support at like 16,175 at some point in time. So it's not unrealistic to think that wherever we top out here, around like the $20,000 range, that we would come back down to about 16,000, get like a 20% pullback. And then from there we would obviously get a bounce, move back up, but then we need to pay attention to what happens after that. Are we going to get continuation back up to like the $22,000, $23,000 range and put in a new all-time high? Or are we going to pull back and essentially like consolidate before we decide are we going to go higher or lower? And if you've been looking at the gold chart, you'll see a lot of similarities between this. Gold essentially, after a multi-year consolidation pattern, came all the way back up to the 2,000 range, pushed slightly above it, takes out all the shorts, all the sell orders that are in place, causes FOMO into the market, and then sells back off. Gold is currently down about like 10% from the all-time high, but it tends to have like a little less volatility. But it's not unrealistic to think now that Bitcoin would do the same thing, as there are quite a few correlations between gold and Bitcoin, or gold and crypto in general. You may have noticed that many of the other cryptos in the space have been going parabolic. That is not uncommon at the top of these runs as well. Just flipping over here now, we have our TJD Fisher. Fisher once again is giving us a high at this first point, another high, but lower on the oscillator, higher on the chart, and then once again a third one here. So 1, 2, 3 drives of bearish divergence. Volume is giving us positive to the upside, saying that we could potentially get continuation here. So once again, we don't want to just get bearish all of a sudden on it, but this is right in line with our target that we put into place a long time ago. Now, based on Bitcoin's actual long-term trending diagonals and a bunch of other factors, it's not unrealistic to think that we could come up to that $22,000 range. Now, you definitely don't want to be FOMOing in at the top, but there's no reason to think that we can't easily break through that 20,000 mark, get a little bit of continuation before a consolidation, pullback, retracement. And a sell-off is not necessarily unhealthy at this point at all. This is essentially what we've been looking for, taking out the all-time high, consolidating, and then continuing to the upside. But the question is that continuation going to happen immediately afterwards, or is it going to consolidate for a couple months, a couple years? Anything is possible. It's very common that assets will retrace all the way back to their initial high, consolidate for months or years at a time, and then finally build up enough strength and break through them. But the most important thing is that if we take out the all-time high, we'll be putting in a higher high on the macro, and then all we need to do is come down and put in a higher low on the macro. So anything essentially above like $3,000. Now, does that mean I think we're going to come back down to $4,000 or $5,000? No, I don't think so. Is it possible? Yes, 100%. But the most important thing is that we don't take out the previous low after taking out the previous high, and we are in good shape. Next, I'm going to look at silver briefly. You'll see silver and gold are basically doing the same thing. We have been talking about this for quite some time. We've been putting in this descending triangle. We're expecting a sell-off and break to come down to that $21 range or $20 range here and hit the 200 moving averages. And that's exactly what's happening. Gold is already touching the 200 moving average right now at about 1800. We have Ethereum next. Ethereum has gone parabolic. Essentially, while Bitcoin was consolidating, Ethereum was pushing up, and then while Bitcoin is pushing up, Ethereum is consolidating. We do have to be very careful. This is very reminiscent of 2017, where essentially Bitcoin will get a move up, break to a new high on the micro or macro, essentially, and then consolidate. The alts will jump up. We've seen like XRP, Tezos, or no, not Tezos. What was the other one? XLM. Stellar. Both those were up like 75% yesterday before like hitting a blow off top. Obviously there's no reason for any one asset to just go up 75% overnight. It's clearly like FOMO after breaking through long time resistance. Nothing wrong with that, but you should be positioned well ahead of time, not FOMOing into like parabolic runs that last less than a day. So but here we have Dixie, essentially got a powerful move back up yesterday, consolidate and sold back off. This is not to be unexpected. This is basically what we were talking about, essentially just finding support at that same level here. Now, in the event that we do break down from this area, we need to pay very close attention. But at this point in time, I don't see any reason why we're not just going to keep bouncing around in this area. Looking at this on the daily can throw you off a little bit. Typically used to looking at this on like a longer scale. So, but as far as I'm concerned right now, we're not seeing any additional like money printing coming into place. In the event that we do get another stimulus push through, then I would expect this to dump as essentially like all the assets would be flowing into, all the cash would be flowing into assets versus just sitting on the sidelines. So this is one of the most important charts right here. Bitcoin dominance. We have basically, we did exactly like we were talking about. Topped out at the 200s, came down, found support on the 90, came back up, topped out once again at the 200 exponential, came back down, found support here, higher low, and then we came all the way back up and topped out once again at the 200, which is exactly what I was saying in the last video, that I was expecting us to top out at the 200, come down and find support at the 200 simple, which we did. We got a parabolic bounce after that. That was essentially like, this was Bitcoin running up, and then this was the alts running up, and then now this is Bitcoin running back up while the alts sell off. So now, most important thing to pay attention to on this chart right here, we're obviously putting in a descending broadening wedge. The blue is the support, the red is the resistance. Now, when these break to the upside, they typically come down to the heart line, the center line of the pattern, and then move from there. So they'll touch the top, bottom, top, come back down to the middle point, find support, and then break to the upside. So if this holds right here and continues to move, we would expect a break to take us up into the Bitcoin dominance range of close to like 74%. That's another like 10% increase in Bitcoin dominance, and would mean that Bitcoin is either going full on parabolic in relation to altcoins, or altcoins are selling off violently in relation to Bitcoin. So we need to pay attention to that. We are getting near the bullish control zone on the Stoch slope. We are above the red trend line, which has been in place essentially for since September. So this has been going on since September of 2019. This has been going on for quite some time now. So obviously I'm on the weekly chart right here. This is a long consolidation pattern. So a break of this range is going to take us like parabolic in whichever direction we go in. And then once again, if the opposite happened and Bitcoin continued to sell off in relation to alts, we would expect it to come down, touch the heart line, and then sell and break down, which would take us close to like the 45% range. So that would be like altcoins going parabolic in relation to Bitcoin. The way it looks right now, though, this looks like there's a lot of confluence that this would potentially be like the topping area around 20,000. Most of the altcoins have not retraced back to their all-time highs yet. In the event that that was going to happen, I would expect this to break back out the bottom and then essentially, get the measured move sell off. Obviously not back down to the low, but to essentially just put in a higher low and then continue this bullish retracement of the bearish dump. And then going to total market cap, we'll see the total market cap as Bitcoin is essentially re-approaching the all-time high on market cap. You will notice that it's also, or on price action, it's also doing the same thing for crypto market cap. All that means is there's still essentially the same amount of space, money in the space in comparison to our previous top at 20,000. The difference just being where it's at. Less of it is in Bitcoin right now, obviously, although Bitcoin is still at the same area based on Bitcoin dominance. But all that means is essentially a bunch of failed projects have gone away. Money has flowed out of those and then just into a bunch of new projects. So once we break this as well, that will be another confirmation that we are potentially, moving to new all-time highs, not only with crypto in general, obviously, which is what this chart tells us, but we would expect Bitcoin to do the same. Now, what we do need to pay attention to is things like this. We are full-on parabolic right here. That's typically what happens near tops. I'm not saying this will be the top right now, that we can't just continue up, but typically that's what happens. You'll notice here we are inside of the bullish control zone. So once again, we could easily see continuation. This is where we entered the bullish control zone previously, consolidated, and then still got a massive move after that. Once again, we entered the bullish control zone in this area right here, consolidated, and now we've got a massive move after that. So it's not unrealistic to think that we would get continuation to all-time highs, but we need to pay attention to this right here. Massive volume spike on the weekly. Every single spot where we had a volume spike that was uncharacteristically large, right here was the all-time high. Right here was essentially that second peak right there. After like almost dead volume in here, we finally got a little volume, and that was the bottom right here. Once again, spike at the top. Once again, spike at the top. Or bottom, depending on how you look at that, because it happened so quickly. So once again, we have a nice spike right here, potentially signaling that we are approaching or at the tops. So definitely want to be careful with that. Don't want to get stuck holding bags for another 3 years, depending on how you trade or accumulate or whatever. But just going back to the long-term monthly, this looks extremely good. Obviously, once we got on top of this, maintained the blue slope, everything was trending to the upside, full-on parabolic once again. We do currently have we have to wait for this close to happen. We still have about a week before it closes. But if we closed right now, we would be closing a higher high than the previous high, with a lower amount of momentum, but that's not going to tell us any kind of divergence is in place, because essentially we would not be putting in a topping pattern. But what's most important is we now have two parabolic stars to the upside, all of our moving averages trending to the upside. Looks extremely bullish to me long term. Does not mean that we cannot get a massive pullback off of this area before continuation. It's very important to remember we topped out at $20,000. The next candle after that was like $14,000. That was a close, but it sold all the way off down to $11,226. So it sold off $9,000 in a single week. So that's what we need to be very careful of. A move from like $19,000 or $20,000 back down to like $10,000 or $11,000 is devastating for most people if they were not buying during the accumulation phase. But before we get bearish on that or anything, once again, everything looks good. Full on parabolic star, all green, moving to the upside. All moving averages slanted to the upside in a positive direction, splayed out exactly how they should be. But at this point in time, even a pullback back down to the 8 is going to take us down to like 15.8. A pullback down to the 21 to take out the parabolic star, it's going to take us down to like 13,000. A pullback as low as the 200 moving average would take us down to like the $7,500 range. Once again, I do not think that that's probable immediately at this time. There's no reason to think that we're just going to dump all of a sudden. But typically what happens is you have a top, a long consolidation, a bottom put in, a lower high, a consolidation, a higher low, consolidation, and then move up. A double top, sells back off, consolidates, higher low, so 1, 2, 3 higher lows, and then finally we can move up and take out the all-time high and get continuation. So that's what I'm expecting at this point in time. But once again, you don't want to just get bearish and assume that everything's just going to sell off right now or top out or whatever. What we're looking for is a blow off top type scenario, something like this. So, and once again, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Here on the daily, pull back down to the 200 moving average is going to put us back down in like that 12,000 range. As we're a push up, it's probably going to put us closer to 20 to 22 or $23,000 range. So, but once again, we're paying attention here. We are inside of the bullish control zone. We are essentially like, at a very high critical mass point, and potentially could get the pullback from our $4,000 low to our, say we got up to $20,000 high. A 50% move on that is going to take us back down to $12,000, which is going to put us in line with our 200 moving average. So it's not unrealistic to think that when we do top out, we will see at least I would say between a 30 to 50% retracement. Anything over a 61 is going to be a little bit shaky, but I don't see any reason at this point in time that we would just violently sell off or anything like that. I have put this into place just to kind of get an idea as to where we were potentially going. I had put it in at 26,000. I don't know that will likely, be the top or whatever. But I have quite a few things leading to that point in general. But assuming that we did not continue to the upside, and we can just see what it would be if we were to top out right now, essentially, what it would look like. We just went with like from here to, let's say we got up just to the like $20,000 range, right around there. That would give us a top of 20,000. 38.2% retrace would put us back at like the 10.7 range. 0.5 would be 88.71, and 618 would be 72.82. I don't think it's unrealistic to think that we could see one of those targets in the near future. But again, I'm not quite ready to declare this as being the top or anything like that. We could easily see continuation from this point right now. Looks extremely bullish. There's lots more on and off ramps for crypto at the time. Lots of institutional money coming in. Lots of retail FOMO coming in as well. No reason to think that we're just going to top out right at this point right now. But again, these are extremely dangerous areas to be buying in. Because if you buy in at 19,000, it goes to 22, you don't sell, and then we get a retrace down to 8 or 10,000. Most people are going to be absolutely devastated. And if you don't capitulate from the actual sell-off itself, most people will be hard pressed for like the time capitulation, especially if we go into like another 1, 2, 3 year consolidation before we get that continuation. So, but there you have it, guys. Just wanted to do a quick update on crypto. Just take a quick look at gold as well. You'll see that essentially when we came down in March for that sell-off, we found support at the 200 moving averages, and here we are after we topped out here at 20,000 all-time high, came down once again to our 200 moving averages. So that's something that would be very common or expected to happen with Bitcoin as well. It's very common in all markets. That's what you typically see. After you put in that all-time high, you see a consolidation, sell off back down to the 200 moving averages. Let me switch over to the monthly. And, obviously gold has been doing this for a much longer period of time. But essentially we topped out in 2012 previously. So basically it took like over 8 years to get back to the all-time high. Bitcoin has done that in about 3 years. So it's moving at about 3 times faster. But based on the history of gold, comparison to like the history of Bitcoin, obviously, you would expect something that's been around for a dozen years versus something that's been around for since the beginning of time. So, to take a little longer. But here, gold is essentially finding support right now on the 8 EMA and the previous all-time high like support back here. It's not unrealistic to think that it could sell back off down to like 1659, but I don't necessarily think that that is going to happen. But it is the possibility. And next target to the downside, that would be like another about $140. So a little less than 10% more. But again, not unrealistic to think that it would sell back down once more. And if we just pull up a fib retracement here from the low during the bear market to the high here during this past little run up, essentially the 236 is going to come in right around 1775. The 382 is going to be a little closer to 1600. 0.5 will be coming in at 1472, and then the 618 back down at 1363. And based on obviously looking at this chart, that was a very strong support right here. So if we came down to the 618, that would be an amazing buying opportunity to get back into gold at essentially what was the equivalence of the breakout point. That would also be a breakout, retest, and then confirmation continuation, which is one of the strongest buys, strongest continuation patterns possible. But again, I will be buying at the various support levels, as we look like we're in consolidation and potentially moving back to the upside, as I'm obviously very bullish on gold long term for, as essentially the economy like devalues currencies and whatnot. So, but there you have it, guys. Just a quick update on the markets and taking a look at how everything's doing. S&P is once again showing a little strength through the upside, and we'll have to see what happens with that. We're essentially just consolidating in this range. But once again, from Halloween to Thanksgiving to Christmas, typically markets will stay bullish. This is the most bullish time of the year in general. We'll get that Santa Claus rally going into the end of the year. Everybody, it's going to be a little different this year, as obviously people won't be traveling as much with everything going on, with the big V and whatnot. But essentially this time of year, everybody's getting together with family, talking about how great their investments are, talking about how much money they're making, talking about what percentages they're up, and then people FOMO in afterwards, hear about things for the first time, start talking about Bitcoin, start talking about gold, start talking about stocks, and it essentially causes like a FOMO rally. It's like a big advertising campaign for investments. So think about it like that. All of a sudden people's families, brothers, sisters, mothers, fathers, grandmas, grandpas, whoever it is, kids, everybody starts talking about stuff. They're sitting around at the table, eating good, drinking a little bit, talking about their gains, and causes essentially like more money to flow into the spaces. And then typically coming into like January, after Christmas, after the holidays, after the big splurge that we see for like, present buying and, investing and all that stuff, we tend to see like a pullback, accumulation, distribution taking place, and like sell off. So I'm still bullish till the end of the year on most of these assets and expecting continuation, although we are at like critical mass, like topping areas for most of these things. So be careful, protect your capital, take care of yourself, keep a positive attitude. If you're feeling that FOMO now, dollar cost averaging to an uptrend if that's necessary, but make sure that you're dollar cost averaging and not just buying all in one area because you're feeling that FOMO. I would always rather buy into an uptrend than buy into a downtrend. Unless you're looking for a long-term accumulation, the best thing to do is buy into strength. So again, that's just my opinion. That's not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research and trade responsibly. There you have it, guys. Crypto Trend Trader, and I'm out.